what we're going to talk about today, this is a discussion that's come up on the members chat and a little bit come up today as well. Where are the weak positions? Who are the weak positions? How do you know? Ultimately, you are never going to know. There is no way of deciding that someone is or isn't a weak position. No way of entirely knowing who exactly is acting in a market. You can see certain patterns and certain hallmarks of, say, a larger participant acting. You can make certain assumptions, and that ultimately is trading, that you have to make an assumption based on balance of probabilities and the more likelihood of people acting in a certain way following seeing a certain pattern. But I have a little look at something that part of this discussion originally came up in was oil and where the weak positions were. So I'll answer a few questions on it in terms of, whoops, one step too far. Who are weak positions? Now, from my point of view, and the way that I look at most things is kind of flip this on its head and say, not just who are the weak positions, because you can never answer that, ultimately. But what you can do is you can say, what people's positions are going to give me a trade? And so really what you're thinking about is, to me, someone with a weak position is anyone who is price sensitive. Any day trader is a weak position ultimately, because you're price sensitive. You will get out on the reaction to a certain point. You will have in your head where you want out. That makes you price sensitive. So therefore you are inherently a weak position. So that's the first thing to be thinking about. And so in terms of weak positions getting flushed out, let's say, then being able to pick a point where you could make an assumption that a lot of people are probably in a similar position at that point means that they're weak and can get flushed out. There you go, there's the weak positioning. Can a position become weaker? Absolutely. Think about this from the point of view of you being in a trade yourself. Do you become more inclined to get out of a trade after certain things have happened? Do you lose confidence in a trade? Do you start thinking, if it goes through this point, I'm going to get out? Do you move your stop to a scratch? All of these things weaken what originally may have been quite a strong position, i.e. one that you are not so price sensitive on. So let's say, for example, you're short, market goes up, you got short here, comes back to you, comes back to you, comes back to you. Whereas originally your stop might have been up here. As time goes by, because you're not getting the move you want down there, you may well become a weaker position. Your tolerance to staying in this is getting lower and lower and lower. This starts coming back to a scratch. For some people, they'll scratch it. Doesn't make sense, and I've done sessions on that before. But people might be more inclined to get out here rather than waiting for their stop up here because of additional information and their own psychology. So the longer you're in a position, often positions get weakened. Also, people joining I should say, similar position also weakens it. Because what you've then got is loads of people waiting for the same thing, and loads of people also looking likely to get out together as well. Think of it a little bit similar to, particularly if you're in London and people don't queue for buses, they just gather at bus stops. The more and more people there, the less and less likelihood you're going to get on the bus. And so you're then in a weaker position of getting on the bus. Unfortunately, that's the way in London. No one seems to queue, they just gather. So what I'm trying to suggest there is that if you're the only person and the bus comes, you'll be able to get on it. The more and more people waiting for that bus, assuming there's no order to the queue, the less likely you're going to get on it. And so the weaker your position of getting on the bus becomes. Also, failure to confirm an expected movement weakens positions. Take it back to this idea again, and you get that. If you're short from here and you see this, your likelihood of staying in now is weaker. So your short, which was looking very strong here, becomes weaker. And so the weakness of a position is to do with your propensity to exit more than anything else. And also partly your inability to prevent a market going against you, which is why you're price sensitive. Do weak positions have to be flushed out before a move? No, not at all, because every position has a counter position. So you could suggest, let's go back to this idea, and I did one of these back in May, looking at an oil one, which is the flip of this. Positions might be getting weaker, but remember, people would have had to buy these. So whilst these look weak, they can still win, because the further down you come, the people who bought up here are now looking in trouble, and they may have to exit. So a weak position doesn't have to get flushed out before a move can happen. I think there's a misconception that there is some kind of greater power in a market that has to flush weak positions before a move, or that a market has to sort of run people out of positions. There's no situation where people actually have that notion. If all this move up is people exiting these shorts, then that of course is a flush out before a drop, because there was no genuine buying. But if you get this break and you then get people buy, that turns into a trend. It's not a flush out. So I'm always very wary of diving to that conclusion, just because of the fact that this then tips you towards assuming that a break is a failed break before it actually is. Ultimately, let's go back to this again, I keep drawing it. That's, as it goes there, you don't know. That could be a trend, that could be a liquidation, that could be a failure. You don't know. There is no way of answering that. It doesn't matter how much experience you've got, you can't know. There will be things that happen as this starts to consolidate that might tell you and give you an earlier idea, but there's no way, as this breaks the level, you can say whether this will or won't be a failed break. If anyone knows how to do that, let me know, because that would be a wonderful trade. The other thing as well that was talked about is, as people accumulate a position, they can then push others out. Now, flip this on its head and think about what that means. The more people in a position takes away their ability to enter another position. Think of it in terms of spending money. The more money you've spent, the less ability you have to spend more money. So just because you now have accumulated something doesn't mean you now have the ability to spend more. So accumulated positions actually have the opposite effect of actually being the point now where, talking of the weak positions, them exiting is more going to influence the market. Once people have got themselves short, their ability to keep selling down here is diminished. The only people who are able to do that are the large participants, and you don't know that they're there until they start putting in a trendy type move. Then you can assume that they have gone from selling here to now selling and selling and selling further away. This is exactly what happened in oil in the previous example I've given you, so go look it up. Mid-May, I would say I did the session, and it was an oil move up from 18.10 all the way up to around about $24. So go check that out. Situation where longer term buying then turned into trending move. Right, so let's go and have a little look at oil, because this is where part of the discussion was coming from. What happened and what was giving us a clue? So, we talked about this idea before. What you're getting up here, no tails on a move up. And you could make the argument that this is strong positioning, strong selling, in the fact that they will not let the market up. Anyone who wants to buy, no, they stop them. No, they stop them. And it's basically someone holding a door shut on people. that takes some strength to do that. So you can argue that these are quite strong positions. But the more time that we come up here, the weaker these positions get. They're not getting the move down that they're looking for. And then what you can also take from a profile to help you out is, yes, these are stopping the move, but here we're seeing continually and at higher prices tails. And what these are indicating is that sellers can't actually get the move down. They move it down and buyers come back and push it up. So this is giving you a different view. This is not so much sellers just stopping the market and buyers running out. This is now sellers trying to go lower, so showing willingness and getting pushed back on. So they now become the weaker positions because effectively they're all sitting there waiting for something to happen, and 3 times in a row they've had the chance to make it happen and it's not. That then creates compression, this builds more and more people in, and this then gives you the spike up, which was the break, and you can then argue that potentially to be a failed breakout. It's a flush out of shorts. It's then a question of where do we go from here, and what we have actually seen is this has become a failed breakout. We've held back below 41, 46 in oil today, meaning that this failure to go up is now an indication we can at least come down and see what we've got down there. Oops, clicked one too far. Right, on the point of weakening positions then. This is what I mean by people taking a position, they've seen it up here multiple times, they keep selling up here. Anyone joining in here, what are you looking for if you're selling it there? You're not looking for a scalp off the level, as in someone who's going to influence the move up by getting out. They're looking for a break of this range and a move down. But they don't get it. Instead, you get towards the bottom of this range here, rejection from an even higher point. So all of these tails are buyers showing strength. And an indication that the shorts now are becoming quite weak here. They can stop it going up, but they can't make it go down. And because they're all in at a similar price, that's where the price sensitivity comes, because everyone in around here is probably all looking at similar places for stops, meaning that on a move up, that can be quick. What you also see on this drop is decent volume on the spike down, and then maintained volume on the move back up. That's an indication again that buyers are holding that bit more strength. Right, final thing, can Delta help you out? And I would suggest yes. So what I've got here is when Delta falls, what happens, versus when Delta rises, what happens. So blue boxes are Delta falling, red boxes are Delta rising. And what I've done is highlighted the low to the high of Delta. And what you see here, very little movement on the way down. Delta falls for the entire day. We open here and close here. Again, Delta falls, they get nothing for it. So this is showing that people are selling up here and getting nothing. Whereas when Delta rises, this takes price back up very, very easily. i.e., people buying don't get anyone fighting back against them. And again here, Delta jumps up and then drives the move up. So in this situation where you can see that you may well have some weaker positioning, what Delta's helping you preempt is the break of this by showing that buyers, given the chance to buy lower prices, have aggression. The only thing you want to see different now is when you get towards highs, Delta rising. Whereas previously you'd seen Delta falling and people selling, you start seeing Delta rising as we reach a high, there's the chance for the break. That's the bit you're looking for, and that's what then spikes us up. After that, yes, you could well say that these weaker positions are flushed out, but you couldn't know that beforehand. All you can know beforehand is there are weak positions, and going back to the how can thinking about this give you a trade, this gives you a trade for the break, fast stop type move up. After that, it's then second trade situation or second wave move or not. You have to decide after that whether you see more buying or not, because we're now moving potentially into a new phase for the market. So hopefully that's given people a few things to think about on weakening positions. Go back and look at those questions at the beginning. Go back and when you're thinking, are there weak positions in a market, ask yourself some of those questions. Where are people going to get out? In terms of the move down in Europe today, which I saw a couple of questions on, this actually comes on the back of a spike up that we saw on Monday morning, failure of buyers to go to the upside. Yes, you could argue that this is buyers getting pushed out. There's also an element of sellers coming in as well. And so it's always hard to deduce exactly who's causing the move, because on the back of the failure to go up on Monday, we've then had consolidation on Tuesday, which is a balancing of buyers and sellers, and then sellers winning out today, added to by buyers who bought on Tuesday thinking it's the pullback, getting out as well. So you have a kind of double whammy of movement. So it's always difficult to be able to say exactly where weak positions are. What you've got to think about is where are people likely to be price sensitive. Ask yourself where you'd be price sensitive. Put yourself into the position of someone looking at a slightly longer term move and ask where you would be price sensitive. That's typically where the weaker positions are.